So it's a fact. There's no doubt that investors seem less rattled with regards to inflation starting to move up again in the US, tariffs looking to be implemented on August 1st. If we had seen, or when we did see, I should say, these things happening earlier in the year, market sold off and sold off strong. For all of you watching, we can all remember what the markets looked end of February, March, and I guess really hit a bottom in April. And times were difficult. We didn't really know where things were going at that time. The president talked about these tariffs, a part trade negotiation, but that these tariffs were all going to be implemented and were going to stay. And then shortly after, we started to hear that trade negotiations were going to happen. But once again, we're starting to see tariffs announced, letters being sent with these tariff rates, but yet the market doesn't, in their current form, at some point in the near future, tariff or trade deals, I should say, will be done and negotiated. Our first chart in this segment shows the S&P 500. Again, what the interesting thing on this chart is, even though it is a 6-month chart of the S&P, you can see pinpoint exactly when the reciprocal tariffs were announced, and look how much the markets went down just after, and really went up again a little bit and then right back down. And it wasn't until May where we started to see things get a lot better, when the United States government said that they would begin to negotiate. The next chart shows inflation. When inflation was back in and around 3%, when CPI was back in and around 3%, hard to see the market sell off a little bit here, although you did see a sell-off, I guess, back in February. You saw the market selling off with a higher inflation rate. And even most recently, you are seeing the market move higher, but it's been a little choppy, a little choppier. We've seen the markets move higher for the months of May and June and most of July. And we'll see. We'll see if inflation gets above 3%. We'll have to see what the markets do. Right now, it looks like CPI is approaching 3. Nobody is talking about that as a problem. Everybody is saying that, yes, inflation is higher, but it was expected. And I'm not sure what that means. Why is it expected now in July, but it wasn't expected back earlier in the year? So again, it's all about the news. It's all about interpretation of the news. You know, someone told me one time, there's no such thing as good or bad news. It's just news. And whether it's good or bad is how you interpret it, is how investors interpret it, is how the markets interpret the news. And I really believe that. So some days you could see bad news, the markets go up. And on some days, the good news, the news is interpreted by some as good, and yet the markets sell off. And it's all in the interpretation. And I guess as investors, it's hard to get around that. It's hard to invest through that sometimes. But I think if you take an even keel, not get too high, not get too low, it's much easier to understand the ups and downs of the market. And over the long term, if you own good quality, we know that good quality always rises to the top.